that up. Pretty crazy stuff. Financial warfare is the use of capital markets as weapons to increase one country's strength and weaken another country's strength. Now, last week we spoke to economist and author Jim Rickards, whose latest book, The Death of Money, is all about financial warfare. And today we're bringing you part 2 of that interview, where we explore how sanctions, the IMF, and other BRIC nations factor into the financial warfare landscape. Now, I first asked Jim if sanctions count within the tools of financial warfare. Here's what he had to say.
There's sort of a gradient, if you will, between traditional financial sanctions and financial warfare, although a lot of the tools are the same. You go back, we've had financial sanctions for decades, and they're often trade-related. Someone's putting on an unfair subsidy, so we'll put an import tariff on something or ban certain goods, so those kinds of things. And then you sort of ratchet up from there to isolate countries like North Korea, so they can't trade or earn hard currency. So those kind of financial sanctions have been around for a long time. But where it's sort of being dialed up a little bit is in where it's in conjunction with purely geopolitical, strategic confrontation, as is the case with Russia. And sure, there's a whole sort of menu that at the low end, you ban people from travel to the U.S. Like I say, a few oligarchs maybe can't go to the Super Bowl. But at the high end, you can take the largest banks in any country and kick them out of the dollar payment system. So the 2 biggest banks in Russia, for example, Sberbank and Bank or VTB, it would be very crippling to them and by extension the Russian economy to kick them out of the dollar payment system. Even more crippling to kick them out of SWIFT, which is the international payment system based in Brussels, in Belgium. Then they couldn't even move euros or yen or Swiss francs. Actually, one of the greatest threats, and one that Vladimir Putin is taking seriously, would be to order MasterCard and Visa to discontinue their operations in the Soviet Union. Then that would really hit a street level. It's one thing to kick a big bank out of a big payment system. That is crippling. But if the average Russian goes to the store and can't use her MasterCard or Visa, that's something that would actually affect Putin's popularity. But Putin has responded to that. He's setting up his own payment system. Maybe in 5 years we'll look back and see that Russia has its own equivalent on MasterCard. MasterCard and Visa are going to be caught in the middle increasingly in this struggle.
Yes, that's very interesting stuff, and I'm glad that you bring up the Visa MasterCard issue. But I want to ask you, what about multilateral institutions such as the IMF? Now, doesn't the fact that there are actual vehicles for creditor nations to extract as much payment from debtor nations as possible make them tools of financial warfare?
Sure, and the IMF is a really interesting case, Aaron, because it's one thing when the U.S. and Russia want to square off on a bilateral basis, or recently, Russia was kicked out of what was the G8. It used to be the G7, then they added Russia, made it the G8. Now it's back to the G7. So the G7 recently had a summit, and Russia wasn't invited, except that there were other things going on, and it was actually the commemoration of the D-Day invasion on June 6th. And Putin was there in connection with the D-Day activities, and he met with all the heads of state. I mean, he met with Merkel, he met with Hollande, he actually met with Obama. So I call it the G1 plus 1 plus 1 plus 1. I mean, Russia's simply too important, too powerful, too big to ignore. So some of this stuff is symbolic. And then kicking Russia out of the G7 is one thing, but you can't kick them out of the G20, you can't kick them out of the BRICS, and you can't kick them out of the IMF. So they still attend all those meetings, and they should. I mean, it's a very important economic power. But it shows there are limits on this kind of thing. I've said all along that the U.S. would not escalate economic warfare beyond a certain level, because Russia's ability to strike back is very potent. We kicked them out of the payment system. Well, they could freeze U.S. assets in Russia. They could dump their holdings of U.S. treasuries, increase interest rates, pop our stock market bubble and our housing bubble. And then an even more sort of covert or dirty level, if you will, use hackers to shut down the New York Stock Exchange. So this can get ugly. I think the U.S. understands that. So you're back to the old Cold War paradigm of mutual assured destruction. Nobody wants to escalate too far because there'll be blowback on them. So the weapons are potent. They're actually more potent when the U.S. aims them at a place like Iran, which really can't fight back very well, but Russia is very capable of fighting back.
What threat do Russia and China pose to take down the U.S. financial system?
Well, you have to distinguish between capabilities on the one hand and intentions on the other. Very little doubt that the capabilities are there. But by the way, the U.S. is not passive in this. The U.S. has the same capabilities, and that again goes back to this mutual assured destruction idea I mentioned. The other analogy we used during the Cold War was, two scorpions in a bottle. So one scorpion stings the other. The victim's going to die, but has just enough strength left to sting back, and they both die. So Russia would refrain from unleashing its hackers to disrupt the U.S. financial system because they know that we could probably do the same thing to them, although we have a lot more to lose. That's an asymmetric threat right there because, Russia shuts down the New York Stock Exchange, we shut down the Moscow Stock Exchange. Well, the whole world is disrupted, but who wins? I would say Russia wins in that scenario because we have a lot more to lose. But neither side really wants to go there, Aaron, and that's why I don't think it will go very far. Now, one of the risks is that for some reason it does go that far because people haven't really thought about the game theoretic structure in which you need to understand these issues. But the other risk is an accident. If you have all these capabilities and you're upgrading a software package and you're malignant hacking capability to shut down a foreign stock exchange, and somebody loads the wrong code or pushes the wrong button, and suddenly it goes off by mistake. That was actually one of the greatest fears during the Cold War. It's not that Russia or the U.S. would intentionally launch missiles, but that having the capability, something could go off by accident.
Can you interlink this discussion on financial warfare with your view on reserve currencies?
Sure. The dollar is the leading reserve currency. It's 60% of global reserves, although that's down from about 70% of global reserves in 2000. So in the last 14 years, the U.S. global reserve position has been drawn down from about 70% to 60%. No doubt that the dollar is leading reserve currency today, but if confidence in the dollar is weakened, either because of Fed policy or the kind of issues we're talking about, financial warfare, people are going to look for other safe havens. I would say gold is number one. The euro is another one, and as I've said all along, the euro is down a little bit because of recent actions by the ECB, but not that much, and I think it's found a floor and probably go back up again. So the euro is one of my favorite currencies. So that's an alternative. So you have gold and the euro out there. Now the real alternative to the dollar, it's not yet taken center stage, but I expect it will sooner than later, is the special drawing right, or the SDR. This is a kind of world money printed by the IMF. It's not backed by anything. It is just like any other printed money, like the dollar or the euro. You're not going to see the SDR right away. It's being held in reserve for a liquidity crisis. The SDR has always been a liquidity tool. If you have that kind of heart attack spike in volatility and there's a liquidity crisis, the Fed will not be able to ride to the rescue because they already did that. They printed $4 trillion the last time. What are they going to do, go to $8 trillion? I mean, there's a limit on what they can do. So in that situation, the global liquidity is going to come from the IMF by issuing SDRs. And at that point, you're going to need China and Russia and these other countries to go along, and they'll begin to insist that the SDR replace the dollar.
Where do the other BRICs, Brazil, India, and South Africa, come in here?
Well, of course, they're not nearly as large. China's the 500-pound gorilla, if you will, and Russia is the second largest member of the BRICS. But, Brazil's a very large economy, and as is India, and they're both got good growth rates. South Africa is a lot smaller. South Africa was probably included in the BRICS more for political reasons than economic reasons. It's a strong economy, but it's quite small compared to the others. But they're doing their own thing. I mean, they're building a BRICS internet backbone. It's going to start in Brazil, go across to South Africa, loop around to India, then China, and then connect to Russia at Vladivostok. I'm not saying that the U.S. intelligence community couldn't tap into it. They're pretty good at that, but it will give them some independent capability. They're building their own development bank. They're building their own reserve bank. Basically, what the BRICS are doing, they're replicating the IMF governance infrastructure. Now, the reason they're doing that, they actually don't want to do that. What they want are more votes from the IMF. They want China, for example, is 10% of global GDP, but its IMF vote is closer to 5%. So China's saying, hey, we need more votes. There are other countries like Belgium, Netherlands that have too many votes relative to the size of their economy. So that battle is going on behind the scenes in Washington at the IMF. So the BRICS are saying, look, give us the votes, and we'll play ball with the IMF and weaken the relative position of the U.S. But if you don't give us the votes, we're prepared to go our own way and replicate these institutions. So it's a little bit of a two-track strategy. But
That was economist and author Jim Rickards. Time now for a very quick break, but stick around because when we return, we're bringing you the best of the best from this past week. And it's the end of the week, which means it's time for us to hear from you. Edward Harrison and I are tackling your viewer feedback in our weekly accrued interest segment. Plus, remember, you can see all segments featured in today's show on YouTube at youtube.com/boombustrt and on Hulu, hulu.com/boom-bust. Now we gotta go, but before we do, here are a look at some of your closing numbers of the bell. Come on back with us.